All right, guys. Hey, I got a little creative here while I'm on the road. So I'm actually doing this live from a coffee shop, and hopefully the internet holds up so I can get through a few charts. If you're hearing my voice clearly and seeing the video and seeing my screen, would you please drop a 5 in the chat so I know we are live? I know the platform I'm using has a delay. I think it's about 10 seconds. So if I seem a little slow, it's because I actually am 10 seconds behind. So I'm just going to wait until I see a couple of 5s in the chat, and then I'm going to dive in to some charts. All right. Hey, Philippe. All right. Thanks a lot for that, guys. Today's session, what I'm going to do is just breeze through. Oh, you got an echo, huh? Dang. I'm not sure what to do about the echo, but thank you for letting me know. Let me see if I can. Let me see if I can do something about the echo. Yeah, I'm going to try it. Yeah, I don't know why it's echoing so bad. I'm going to try something different. All right, guys. What I just did is I switched my internet to a different server. So with any luck, maybe the echo is gone now. I know there's still a 10-second delay. So um, if the audio is much better now, please drop a 7 in the chat if my echo is gone. I know it's a tall ask for me to be doing a live from the road with questionable internet, but I'm really looking forward to showing you some charts and going through. So hopefully you guys are still with me. Oh, the audio is not better. Well, cannot listen. Audio default. Let me try this mic. Tell me echo cancellation. All right, let's see. Okay, great. Thank you guys for being patient. So now that you can actually hear me and see the video. All right, thanks for the comments, guys. Appreciate you. All right, let's go ahead and just dive into the charts. What I'm going to do in this video, what I'm going to do is keep it brief. The market opens in about 40 minutes. I really want to keep this brief. I'm only going to cover maybe 4 or 5 charts, and I'm just going to kind of keep it moving. And really what I'm going to do is just share with you my normal thought process as I look at one of my own charts and talk about the parameters, okay? So here we go. We're going to dive in to the first chart. Let's actually GJ, which I should have held on to my short. This was a rather remarkable play of Elliott Wave. Just the way this counted, and right up here into this box, there are 2 different ratios that I was tracking. I was tracking the ratio of this internal structure, which is this. I used 2 different colors up here for the ratios, and then the other ratio is for this entire length of this other wave 5. and they both lined up at the in other words, the smaller degree wave 5 and the next degree up wave 5 both projected into this box, which is why I started building my short. And then when it came down and started bouncing here, I covered the shorts, and it was wonderful. But in hindsight, an A wave likes to target the 382. Let me make this as bright as I can. This is just good information. An A wave targets the 382. So, and it doesn't always mean that that is exactly what's going to happen. It just means if you are at a what you consider to be an important key level, whether it be the top of a wave 5, top of a wave 3, of whatever degree, you're going to look for the A wave. If you're looking for a correction, a 3-wave correction, which is what you would expect to see in a large degree wave 4 that goes with this white wave 3, you want to see a 3-wave correction. So what this could be doing is A, soon it'll bounce, come up in a B wave, and then get a nasty C wave back down. And given the top of where this wave 1 is, this is another parameter. Then I'm going to move on from this chart. But when you're looking for a pullback in a wave 4, you do not want to see it break into the price territory of the wave 1 of the same degree. So I keep my colors coordinated a bit so you can understand what degree. So if this count is correct, and this is the top of the white wave 3, then we should see a 3-wave correction for wave 4 that does not get below into the price territory of the top of wave 1. That doesn't mean it needs to come all the way down here. We're going to look for a bounce, and then I'm hoping to see a bounce soon, because the C wave of this bounce should also be composed of 5 waves. So the recipe for shorting again on this instrument will be wait for the, maybe I'll go long actually, if depending on how this look gets an initial bounce, I may go long. Because a B wave, although it's very difficult to track a B wave because of the nature of B waves, is not standard at all. It's variable. Sometimes it's a 3-wave move as a B wave. Sometimes a B wave, believe it or not, can even be a 5-wave move. Sometimes it's a structureless, random-looking move that doesn't measure well at all. So when that happens, all I do is simply look for a retrace that goes somewhere into our well-known, well-established, typical zone for a bounce to get contained, which is between the 618 and the 886. So if this can bounce, I may get long. If this bounces and looks good for a bounce, I may get long. And what I do when I'm in a B wave or a wave 4, I always take gains at the minimum what I would expect. So I think the minimum for a B wave would be somewhere in even shy of the 618. So I would look to take it off. And then the way you get short with Elliott Wave is because you'd be expecting a C wave down, you want to get short after you see 5 down and then a 3-wave retrace that does not exceed the top of where that B wave topped. So you want to go 5 down, 3 up, and that's where you want to get short with a stop above the B wave top. And then you want to see a nasty, nice 3, a wave 3 of C. And as soon as it starts bouncing, get out of your short. This is something that took me a long time to realize. I made the mistake when I first started using Elliott Wave. I would always look for the ultimate target, the ultimate extension. And over time, I've learned if you really focus on the wave 3, regardless of the degree, especially if we're scalping inside of a corrective wave. A corrective wave is typically 3 waves, A, B, C. And there's other things going on too, but I'm just giving you a basic idea. A, B, C. The wave C should be composed of 5 waves. So after the 1, 2, we can then get short and try to with a stop above the previous high, because you're really trying to capture that wave 3, which is going to give you the most amount of pips in the shortest amount of time And as soon as this starts bouncing where you think wave 3 should terminate, which is the 1618, you get out of the trade. Cover, take your gains, and don't look at the chart anymore. Go look at another chart. These are things I've learned the hard way, which is why I'm in the club with Armando. Okay, so that's GJ. Let's keep it moving. Oh my goodness. Silver. Look, I don't need to say much about this because in the previous video I did last night on silver, which by the way, I made that video backstage at my gig. I was backstage putting out the video of silver very excitedly because of this structure looking so good. And in the video, you may recall, I don't know if you guys have watched my silver video from last night, but if you're into silver, I highly recommend that you go back. It's just the most recent video that I did. And I was talking about how if this low, let me make this larger because I know some of you are on the phone. I want to make sure you can see exactly the levels that I'm talking about. So this 3-wave structure off of the high. Remember how I was just talking about a 3-wave structure? This time it's in reverse, right? When we're talking about GJ, we're going to end up looking for a 3-wave structure that's to the upside so we can short it. Here we were looking for a 3-wave structure to the downside so we could long it. Now, I was already long a runner from this thing, and then I put one on after this bounce, and then I had open orders back down here, and one of them actually filled overnight. I was long asleep by, let's see. Oh, well, I was probably awake, but I wasn't looking because once I set my orders and my stop was way down here below the 886, the idea being, had this bounce, I mentioned this in the video, if you get one more low, and I even moved the labels over as an example in my video, that this could be the wave 4 and then a final wave 5 of C. So this is a very good moment, just a sort of a teaching moment. This is 3 waves for an A wave, a random, not very clear structure for a B wave. No surprise there, because the B wave, as I was just saying, is a variable wave. It can do anything. And also, by the way, a B wave can extend above the top of the previous high and still be a B wave. Now that is what you call a fake breakout. You know, people call it a fake breakout. You don't buy the breakout. This is why Armando has taught us, if you're going to try to buy a breakout, wait for it to break out. Get a 1-hour candle close above the key level and then buy the back test. Genius. Simple, elegant, effective, repeatable. It's so easy. Even I can understand it. So we were looking for a 3-wave move with 3-wave for A, random B wave. We want to see 5 waves for C. Now, this could have been the bottom of C, but as I mentioned in the video, I wouldn't be surprised if it came back down, and I was prepared for that, and that's exactly what had happened. So I'm viewing this as a 1, 2, 3, 4, 5th wave of C. Look at the reaction. So now, I don't want to get into the weeds here on this, but last night I was saying if it pulled back into here, that'd be great. Well, guess what it did? It just kept extending. So all I'm going to do, without even getting into the weeds of what is exactly going on in this structure, this is clearly impulsive. And to me, I would view it as a 1, 2, 3. And look, this is a perfect example of a possible B wave that extends above the previous high. Here's the previous high for wave 3. I think this could be an A. Actually, you know what? I'm not even going to complicate it like this. This is what I was going to say. It could be where this could be the top of wave 3, and then wave 4 is an A, B, C for what is called a running flat, where wave B exceeds the top of wave 3. But the more I look at this, why complicate it? Let's use Occam's razor. You guys know about Occam's razor, which is always default to the simplest possible explanation. So, sorry, I'm doing this. Excuse me. I'm getting a little. If that's the top of wave 3 and this is like an A, B. See, who cares? This is minutia. Who cares? If this is the 3 or if this is the 3, it doesn't matter. This is impulsive. This is a flat correction. Looks like a wave 4. Once you've looked at this enough, And now, once you've looked at Elliott Wave enough, you'll start to discern the difference between a wave 2 and a wave 4. Oftentimes, a wave 2 is very sharp and typically deeper than a wave 4. A wave 2, it's not unusual to see it at the 618, the 764, or even the 886 for a wave 2, whereas a wave 4 is typically retraces anywhere from 236 to 50% of the length of wave 3. And after a while, you get used to the visual of that. So to me, this looks like a wave 4 flat. So this could be the top of a new wave 1. And if that's the case, we would be looking for a 3-wave correction. Now, look, I sound like a broken record because I am, because trading and analysis is repetitive. And that's what you want. You want to find something that works. You want to find something that works that you can just do over and over again. And the better you get at analysis and the better you get at trading, it's going to become less and less exciting. You want to have the same mental and emotional disposition when you put on a trade that you have when you're performing analysis on a Saturday morning, when you're just relaxing, doing some analysis, marking up your charts. Pay attention to your mindset in those moments. Pay attention to your emotional disposition in those moments. And then when it's Sunday night or Monday morning and you're putting on a trade, you want to have the same kind of mental thing. It's like, well, this is my stop way down here, and this is where I'm putting on the trade. If you already feel anxiety, your size is too big. Size it down so you can properly use the stop. Well, look at this thing dropping while we're talking here. So what I would do is look for the 382. So let me put the 382 on here. And, I don't know what's going to happen, right? Nobody does. I'm just going with what has happened in the past, and what might be reasonable to consider would be some kind of an ABC, something like that. And ideally, wouldn't it be great if it doesn't even exceed the 618? Here's another thing I've observed in Elliott Wave regarding pullbacks and things like silver and crude oil that have a lot of volatility. Sometimes the pullbacks, when the bull mode really kicks in, the pullbacks can be shallow. So this is only an 8-minute chart. So I would think this move down has very little structure. So it has a little bounce right here. So this could be all of wave A soon. It could terminate somewhere down here. And by the way, just because I was saying it's repetitive, we're doing the same thing over here on the GJ, just looking for an A wave at the 382. Although the biggest difference is this is the A wave of a wave 4, which is measured differently. And right here, we're looking for the A wave of a wave 2. So we're bringing the measurement of the tool all the way to this low. Now, you want to stay small enough. I'm already kind of a little big. So if this keeps coming much deeper in a direct fashion, then I'm probably wrong and something else is going on. I might start peeling off some of the longs because I'm in profit. Had I not been making this video and had I been paying more attention, I probably would have taken off half up here, but I was at Starbucks ordering a coffee trying to get the internet working. So I missed taking off some gains there, which I would have looked to add back here. So all I can say is I'm along for the ride now. But the idea would be there should be a bounce soon. There should be a bounce soon. And then, look, it's also possible that if this thing is in a hurry, that if it starts bouncing and looking like 5 waves, because this B wave should not look like an impulse. It should look gorpy and the proportions should be out of whack, and that will give me a clue if it's really a B wave. And now this is really crazy, but sometimes you got to do this. If you're really looking for structure, you got to go to the lower time frame. See, this has almost no structure. This is just like straight down. And that could be an A wave because there is structure in there, but we're on such a tiny scale. I mean, you'd be hard pressed to find any retrace. This is just a direct drop. Okay, but the idea is this should hold somewhere soon and give us a bounce. So we use 2 things when we're looking for these corrective waves. We want to look at the structure of price, whether it's in 3 waves or shaping up as an impulse. And we want to combine looking at the structure with the fibs. So this is getting a little deeper for an A wave, but at this scale, I mean, we're on a 1-minute chart here. It's the smaller degree that you're tracking in Elliott Wave, the less reliable the rules are, the less reliable the guidelines are, which is very similar to how a guy using candles, or even Armando, you know, he starts with the weekly chart, the daily, and drills it on down. By the time you get to the 5-minute chart, that's very unstable, right? You can have a pattern that works on the higher time frame candles, but on the lower time frames, it may be less reliable. It's the same thing. You're going to just see a lot more volatility on the lower time frames. All right, let's keep it moving. I'm checking back. I want to check back in here just to make sure I'm still alive. Yep, the audio is still good. The video is still good. I don't see any comments to the contrary on that. So I assume I'm still rocking and rolling here. Let's hop back into another chart. In this case, let's move on to gold now. Look at this. I had already peeked at this. How beautiful. Now look, this is another perfect example of a potential three-wave move. And what you could have here is an A, B, C, right into the box that I was looking for to be a wave 4. And look at where the wave, now look, I almost always take gains near the 1618. Can you see this? Hopefully my chart isn't too small, but I was looking for this wave 3 up here, which is why this buy box was there. And the target for such a setup is the 1618. Well, look, it hit it and then it pulled back, but then it shoved one. This is really a beautiful looking top with a wick. Beautiful. And then a 3-wave correction just dipped below this zone here in red, but it was supported by this wave 4 box, which, guess what? As you can tell, it caught between the 236 and the 382 of the entire length of the wave 3. What you're looking at right here in gold is like a textbook perfection Elliott wave. You have 5 waves up, a larger 3-wave correction, and then the beginnings of another 1, 2. This is the holy grail of Elliott wave. I mean, I cannot show you a better setup than this, because after the 3-wave correction of a larger degree, you want to buy the retrace after 5 up. So 5 up, 3-wave correction, buy it. Stop goes below the previous low. If this is too much heat for you to take, figure out a way to trade really small so you can take this heat. Because I'm telling you, if you got long there and put your stop right there, you would have gotten stopped out, and then you would have missed this beautiful run. So ultimately, this comes up into this target zone. A minimum target for gold is, man, the sun is actually shining in my face here, so I can't even see this. But this number, whatever this number is right here at the bottom, this is the target, which is just above, actually. Not very much further to go. I mean, they can keep going. They can do anything, but these are just parameters. So right now, a reasonable stop, I mean, it wouldn't be totally unreasonable to put your stop at this prior low right here. But I think a better stop would be down here. Because if this thing comes all the way back down and gets into here, then something else is going on, and I've counted this wrong. But, you know, I don't want to keep getting in the weeds here. Let's move on to crude oil, because I know, actually, let me see what Nasdaq. Okay, Nasdaq, real quick. This was an alt count that I had on this chart from way over here. And I know it was exciting to see this bounce, but this was a fib that I was aware of and had considered to be my alternative, and looks like it took the alternative. So it would not be unreasonable to expect a bounce from here. And I will have to adjust this target box by dragging this down to the new low that was struck just today, just this morning. So anyway, I'll adjust that later, but you get the point. And I think this is possible that this still needs another bounce and another low. So if you're long, if you're scalping long, I wouldn't overstay my welcome. And again, it's going to be the structure of this bounce. It's going to help give me a clue as to whether this is the next impulse for 1, 2 higher up and out of here to close this gap, or if it's just a gorpy, overlapping, corrective looking bounce, or if it even moves in 3s, I'll be more inclined to suggest that it's going to come back lower. All right, so now crude, I haven't looked at. Oh, wow. So I must have got stopped out. I know I got stopped out. I had longs. I added to them at some point in the middle of the night over here. And then I stopped out below structure here. So I stopped. I'm not in a crude trade right now. Man, this sun is killing me because I can't really see my screen in this place where I'm at. Let me see if I can try to see what's going on here. All right, so crude likes to make double bottoms, and we are right here at the previous low. So even though I did like this initially as 5 up, and it did have some confluence in those boxes up there, this has now come all the way back for a potential double bottom. Now, the only thing I like about this move so far is to me, this does look, now that this form has completed more. 1, 2, 3, 4, A, B, C. This could be it could be a 3-wave correction inside of this B wave. So here, to keep it really simple, which is my goal here, that's why I named the channel Elliott Wave Simple, because you can really go down a rabbit hole with Elliott Wave. There's always alternative counts. But let's just revert back to price action. If this level holds as a double bottom after a 3-wave pullback, because there's no question this could be considered a 3, I mean, this is 3 waves. To me, this is clearly 3 waves. So 3 waves suggest, in this context of the larger structure, 3 waves suggests corrective. So it could be as simple as whatever this low is, instead of this being 5 up, this still could be a correction. And this could be, in other words, this could be another 4 working on a 5th down for a deeper correction. So now you see what I did there? I've zoomed out to a larger degree. I've zoomed out because the assumptions that I was making is that somewhere in this box is where we would expect a low. That's why I had this question mark here. This question mark has been there since we first started entering this box, because the idea is nobody knows anything, right? You don't know where the low is going to be. In fact, picking a low it's kind of there. Sometimes you can get key levels, but what is better is to wait for a reaction of price off of a low where you think a low, it would be reasonable to assume a low, and then look at the reaction of price at that level. So you want to see crude holding here as a double bottom and bouncing. And this is now wrong. Okay, so this projection that I was looking for did not play out because this did not hold. So without getting into the weeds of Elliott Wave for the moment, and this used to be a criticism of mine about Elliott Wave, is wait a minute, so when you guys are wrong, you just move labels. Well, yeah, because when you get more price action, you got to move the labels and take measurements again. Duh. I mean, you do the same. Everybody does that. Everybody does that. Armando does the same thing. You look for support to hold. If it fails, you look for the next support to hold. So in this broader context, zoomed out, looking at crude oil, this is the 886 of this entire move up. Now look, now I'm really zooming out. This is a 4-hour chart, but I want to show you this for context. And it's kind of interesting because I had an idea. See this liquidity candle over here to the left. Like, are they going to come back for that? So look, so even at a larger degree, I'm really zoomed out. We're just in between the 618 and the 764 of this larger degree, right? But when we're looking at the smaller degree, we're already at the 886. You get what I'm saying? So the only thing great I can see right now is this is 3 waves. So this still could be finishing off a low somewhere down in here. It could be. So unfortunately, what I would do, given this drop to this region, I would wait. And I would also look at Armando's work, because it's quite possible that this is exactly where Armando might say, get long and put a stop below structure. Or if it's going to break this structure, look for a 1 hour close below here. Look for a 1 hour candle close down in this zone somewhere, and then look for the back test and then sell it. Right? You've seen this before. This is Armando's thing. It makes a lot of sense because this was the low. I mean, we've already broken it, right? We've already poked below it to a small amount. So if this, it's as simple as that. It's as simple as that. I could keep talking, but what's the point? Either price is going to come down here and get a 1 hour candle close, and maybe at back test you could sell it, and then it's going to come down lower. You know, there's a bunch of different ideas in the structure. You could also put Armando's fibs on here, which I do quite a lot when I'm just checking stuff like this. You put Armando's fibs on there. Okay, and watch this. So we use his fibs, which I have saved as a template, and it's called Armando. So, you know, if it's not going to hold this structure right here, it's going to come down here and get a close. And then if it comes back up, you sell it. And then the reasonable target would be just go for the next fib down. So that would be like 100 points. If this comes down and gets a back test up, you sell it, and your stop would be above structure. So it's only a 5-minute chart, but if you're going for 100 pips, you know, and you're willing to risk 40 to get 100. So you wait for this to come down, you wait for it to bounce, you go short, you put your stop above structure here on the nano, and your target is down here. So you're risking 40 to get 100. I don't know. It kind of looks like it's consolidating down here. Now that chart, I'm not active on that chart. So yeah, it kind of looks like it's consolidating right here. So what you want to see is a bounce and a retrace. Same thing in reverse. If you see a bounce and you think, okay, this is like a double bottom, and even if on a nano basis it looks impulsive versus corrective, you wait for a pullback and you go long and you put your stop below structure. So very curious now what Armando is seeing. I really love Armando. I'm always coming back and cross-checking what Elliott Wave sees versus what he sees. So that's what I would do for crude oil. Now, since I went through pretty much everything that I wanted to cover, I'm going to hop back in the ride and get on back to DC. So hey man, thanks guys for being a part of this and hanging out. And that's all. If you have questions, feel free to ask me questions either in Armando's club or in the chat of the YouTube video or wherever, and I'll be happy to answer any questions. But hey, this was great, guys. I appreciate you all being here. And with that, I'm going to hop back in my car and keep the drive going. So hopefully this stream went well, and I will see you guys in the club. Yeah, thank you guys. Thank you. Have a great rest of your morning and good luck. I'll see you. See you in the room. Bye-bye.